Welcome back to Investing Talk Podcast. Today we're launching an intensive analysis on a company that's really moved to the absolute center of some huge global conversations. We're talking about domestic supply chains, critical minerals, the EV revolution, MP Materials Corp. And we're diving into their massive strategic shifts, their fundamentals, the technical signals, really trying to answer one core question for you. Based on everything we're seeing right now, is MQ Materials a good time to buy?
Yeah, it's a really essential question, especially now. The story around MP has fundamentally changed, hasn't it? Just in the last few quarters.
Seems like it.
They've pivoted, from primarily being a raw materials miner. Now they're positioning themselves as, well, the strategic centerpiece of U.S. industrial and defense capacity. Our sources show a company making huge strides in vertical integration.
Absolutely. And before we unpack all that, if you find this analysis helpful, please just take a quick second to subscribe, maybe like this, and leave us a comment below. And hey, if there's a specific company you'd like us to look into in a future analysis, let us know that in the comments too. All right, our mission today is to give you the full picture. We'll review the company's recent, really transformational strategic shifts, assess their current financial health, and then look at the upcoming catalysts, specifically those hitting in the next, 3 months. The things set to drive movement.
Sounds good.
Let's start with the big picture then, because, the last quarter has seen this robust share rally, lots of market recognition. It suggests something foundational is changing.
It really does. And the biggest story, without a doubt, hit back in July 2025. That massive public-private partnership with the U.S. Department of Defense, the DoD.
Right.
And this wasn't just, a grant or a standard contract. No, this was a multi-billion-dollar commitment specifically designed to catalyze the domestic rare earth magnet manufacturing supply chain.
Magnet manufacturing, okay.
Exactly. So MP is no longer just a miner. They are now essentially the anchor tenant for U.S. supply chain independence in this area.
Wow. Okay, that immediately suggests, reduced political risk, maybe, and a huge barrier for competitors.
Yeah.
But talk about the specifics of the deal structure. It sounds kind of complex. Preferred equity, warrants, loans. How does that specific structure de-risk the company's revenue for, say, the average investor looking at this?
Yeah, that's the really fascinating part. It's actually a very smart commitment from the government side. So, yes, the DoD gets convertible preferred equity and warrants, which down the line could effectively make them the company's largest shareholder.
Okay, big alignment of interest there.
Huge alignment. But the operational gold standard really is the 10-year price floor and the offtake agreement. Now, think about what that does. It guarantees revenue stability. It protects MP against commodity price volatility for a whole decade. And it ensures they have a major, reliable buyer, the U.S. government, for their product. It just takes a massive amount of market uncertainty right off the table.
Right. That kind of institutional confidence, that doesn't go unnoticed by the private markets either, I imagine.
Exactly.
Because right on the heels of that DoD announcement, the company managed to complete an upsized $650 million equity offering, selling, 11.8 million shares at $55 per share. When a company pulls in that much cash, what's it signaling about their growth ambitions?
It signals they're hitting the accelerator hard, not the brakes. That capital is specifically earmarked for rapidly scaling their 10x facility expansion and, other general corporate purposes.
It's a vaster expansion.
It tells us the timeline for bringing their production capacity online is probably being dramatically shortened. They're leveraging that government support to move faster, frankly, than any private entity probably could alone.
And their private sector partnerships seem just as crucial. We saw that August 2025 announcement, a pretty significant $500 million multi-year partnership with Apple.
And that deal really shows how MP is bridging, the national security narrative with the consumer tech imperative. Apple needs U.S.-sourced magnets, right, for sustainability, for security reasons.
Makes sense.
So the partnership covers sourcing, yes, but it also includes joint plans for a new rare earth recycling facility out in California. So this is vertical integration that also addresses two major long-term risks. Reliance on foreign supply, sure, but also the environmental impact of mining.
Recycling, too, interesting. So we're watching this big strategic shift happen almost in real time.
Yeah.
Where are they operationally right now? What's happening on the ground?
Well, we're seeing key milestones being hit across the board. The Texas Magnetics facility, they call it the Independence plant that's commissioning right now. That's a crucial move downstream, right? It means MP is moving past just selling basic rare earth concentrate. And at the same time, they're gearing up the Mountain Pass site for heavy rare earth separation expansion.
Ah, the other piece.
Exactly. And this, again, is a direct result of that DoD funding. It marks a really tangible commitment to move away from reliance on Chinese downstream processing.
That transition, raw material supplier to finished magnet manufacturer. That seems to be the core of the growth story here. Okay, let's pivot a bit. Away from strategy, let's look at actual performance. The narrative is powerful, sure, but is the underlying business actually delivering the goods?
Well, the numbers suggest they are. When you look at the top line, the growth is undeniable. Q2 2025 revenue came in at $57.4 million. That's an 84% year-over-year increase.
84%, wow.
And the production numbers back that up. Record output of neodymium praseodymium, NdPr, that's a key magnet material, hitting 597 metric tons. That's up 119% year-over-year.
119% jump in production capacity in just 1 year. That's huge. It proves they can physically scale up.
Yeah.
Now, for a company this capital intensive, financing is obviously critical. They just raised $650 million. But what does the overall balance sheet look like? Are they burning through cash, building these huge new facilities?
That's always the right question to ask, especially for a resource company. Fortunately, MP reports a healthy balance sheet, strong liquidity, and very low debt. And the current market cap, around $13.87 billion, that also provides the scale they need for continued capital investment. They look well-funded for this massive build-out phase.
Okay, but we have to tackle the counterpoint directly. Our sources do note the company still reported a trailing 12 months, PTM, net loss, about $101.38 million. How do we, as investors, reconcile record production and massive revenue growth with a 9-figure net loss? Isn't that a major red flag?
It's a critical nuance, definitely. But I wouldn't call it a red flag in this specific context. You really have to understand the capital expenditure cycle, the CapEx cycle of these kinds of strategic resource companies.
Yeah.
That $101 million loss, it's largely the cost of building future revenue. It reflects the massive depreciation and the operational startup expenses that come with bringing facilities like the Texas Magnetics plant and the heavy rare earth separation capacity online. They are basically intentionally sacrificing near-term earnings for a long-term market dominance.
So it's a standard kind of growth first, profits later approach, similar to what we saw with, say, tech giants years ago, but applied to heavy industry and infrastructure here. Are you saying investors should look at the operational ramp-up and the top-line growth as the leading indicators, not the current bottom line?
Precisely. I mean, look, if they weren't growing production at 119% year over year, that loss would be terrifying. Absolutely. But because they are demonstrating execution, they're building the infrastructure that guarantees future revenue from the DoD, from Apple. The sources really emphasize that the current loss is acceptable. It signals, hopefully, a positive trajectory toward profitability once these expensive facilities start producing at full scale.
Got it. And that leads directly to their competitive advantage, right? Their moat. They're positioned as the single North American source for this stuff. But how deep is that moat, really? I mean, aren't they still reliant on China or other foreign entities for some of the really specialized processing steps? How much of that supply chain independence is aspirational versus, current reality?
That's the key tension, isn't it? And something investors need to understand. While they operate the only rare earth mine and processing facility of scale in North America, which is a massive, massive advantage, the reality is the global rare earth supply chain is deeply complex, intertwined.
Right.
So the transition to true, complete independence, that's the journey they're on right now. That new DoD funding, the Apple partnership money, it's specifically aimed at closing those remaining gaps. Things like heavy rare earth separation, advanced magnet finishing. So the moat is real, absolutely, but it's being actively reinforced very rapidly through those government and strategic partnerships.
Okay, that makes sense. That dominance and the clear strategy to close those remaining gaps probably explains why analysts remain so bullish then. The consensus rating is a strong buy, right?
Yeah.
With an average price target up there at $64.40.
Yeah, it reflects the market pricing in future execution and, frankly, the strategic necessity of this company's success to the entire Western EV and defense industrial base.
Excellent. Okay, let's shift gears one last time and look at the charts. For the listener maybe focused on timing and entry point or just assessing near-term momentum, the price action is key. What are the technical signals telling us about MP right now?
Technically, the stock looks very strong. It's in a sustained uptrend. When you look at the key moving averages, the 10-day, 20-day, 50-day, 100-day, even the 200-day average, The stock is trading above all of them.
Okay.
That's pretty much the definition of a textbook bullish trend, and it indicates significant institutional support holding the price up.
We saw the stock spike recently, didn't it? Up to a 3-month high near $85. What are the crucial price levels we should be watching now? For support below and resistance above?
Good question. The key support level, where you'd expect strong buying to step in on any pullback, seems to be pretty firm in that $66 to $70 range. Holding that is crucial.
66 to 70, okay.
And the immediate resistance level is right around that recent high, say $82 to $85. A clear high-volume break above $85 would likely signal that the next major leg up is starting. Could bring in more buyers.
And the momentum indicators, the things that tell us how much, gas is left in the tank for this rally, are they confirming the strength, or are they maybe suggesting the stock is getting a bit overheated up here?
No, they actually confirm the underlying strength, but without suggesting it's dangerously overbought yet. Indicators that measure trend velocity, like the MCD and the ADX, they're flashing strong buy signals.
Okay.
This suggests the current uptrend isn't just noise or a short-term spike. It seems supported by significant institutional conviction. And the relative strength index, the RSI, it's sitting quite healthily in the mid-60s.
Mid-60s, so not extreme.
Right. It means the engine is definitely roaring, but there's still, theoretically, plenty of runway left before the stock enters that traditionally overbought territory above 70 or 80.
Okay, so strong fundamentals, strong technical chart. The final piece is the calendar. What key catalysts are actually scheduled in the next, say, 3 months that are likely to drive liquidity and maybe some short-term volatility?
Right. Q4 2025 looks like a pretty catalyst-packed quarter, and it's really centered entirely on proving execution. First major event is the Q3 2025 earnings release. That's scheduled for October 30th.
October 30th.
Soon. Yeah. This will be the first real chance for the company to give detailed updates on the operational progress, the new magnetics facilities, and maybe some initial synergy realization from those big DoD and Apple deals. Then looking further out, we have the Q4 2025 preliminary earnings and outlook on January 27th, 2026. So those are critical reporting dates.
And beyond the company's own reports, there's potential institutional movement that could act as tailwinds.
Exactly. Keep an eye on November 11th. That's often around when major institutional shareholder filings, the 13Fs, get announced. When massive funds report they've taken a new, large position, it can definitely trigger follow-on buying.
Right.
And furthermore, index-related buying could be key in mid-December. Specifically around December 17th, that's when the S&P 500 and various ETFs often do their rebalancing reviews. Positive rebalancing or, potential inclusion announcements could mandate billions in passive index buying.
We should also probably briefly touch on market speculation, rather, unconfirmed stuff that could still surprise the market.
Yeah, worth mentioning. 2 key rumors seem to be circulating. First, there's pretty intense chatter that another major EV producer, maybe US, maybe European, is close to announcing a large contract to source magnets from that Texas Independence facility.
Another big customer.
Right. That kind of commercial validation, beyond just Apple, would really solidify their position. Second, there's ongoing speculation that the DoD might exercise some additional warrants sooner than expected, which would further increase their equity exposure and just reinforce that national champion status for MP.
All right, let's try and synthesize all this for the listener. We've looked at these transformational government and corporate partnerships, record production that seems to justify the heavy CapEx spending, a dominant North American competitive moat that's getting stronger, and a highly bullish technical chart confirming a powerful uptrend.
Yeah, I think the investment thesis here is, well, it's pretty unequivocally bullish at this stage. The confluence of factors, exceptional top-line and production growth, the structured de-risking provided by the DoD, strong technical momentum, and a calendar full of actionable catalysts right through Q4 2025. It really does make this stock look highly attractive right now.
So weighing all that, we are landing on a strong overall bullish rating here, 8.5 out of 10. This seems to make MP Materials attractive, both for maybe shorter-term trading, thanks to that calendar of catalysts and the momentum, and also for longer-term accumulation, given its strategic dominance in the future of U.S. industrial supply chains.
And perhaps here's the final thought for you to consider. MP's outlook is clearly driven by its unique position as the U.S. rare earth national champion. Now, given that execution and, frankly, defense of supply chain independence are key political and economic drivers, how will the intensifying global policy surrounding critical minerals and, let's be honest, the geopolitical rivalry with China, how will that ultimately accelerate or maybe even hinder the speed of MP's facility buildouts and its ultimate long-term profitability trajectory.
A truly high-stakes question to end on indeed. Thank you for joining us for this analysis of MP Materials Corp. We'll see you next time on Investing Talk Podcast.